So insurance has been having a bad few years.
Yeah.
I think there's a fair way to describe it. Can you, broadly speaking, explain what's going on exactly?
The insurance companies have taken a lot of loss, more than they anticipated, and they're doing what they can to get caught up. Until they can get caught up, what they're also doing is making massive restrictions through their underwriting, through their expectations of what you're allowed to get away with through billing issues or whatever. They are canceling people in a way they haven't in the past. They're paying closer attention to each of their customers in a way that they don't always do. It's what we call a hard market. Last time we had one of these was back in 2008, 2009, when I got started in the industry. It didn't last as long as this one has. This one's been about 2 to 3 years now, but we are estimating 2025 looks better. So hopefully that is in fact true.
So when you say better, does that mean rates are going to go down or rates are going to be steady and they're not going to increase?
No, that's a very good question. They're not going down. I would love if they would go down.
Right.
They are not going to go down, maybe ever. That's just insurance is always going to keep going up. I would say it this way. You go to your auto body guy, at no point do we expect that his shop rate is going to go down, right? At no point do we expect the cost of repairing a car to go down. At no point are we expecting that a lawsuit for somebody that was killed in an accident and now wants to sue for such is going to go down. Things are only going to continue to go up. And so when we hear stable, like when we hear that it's supposed to settle down, we hear it means it's not going to be going up next year. And as the person that has to answer that phone call and that question of why did my rates go up a good 3 to 4 to 5 times every day, I'm down with stable.
Oh, geez. Yeah. And you know what? Given how fast things have been increasing, that's stable is okay. Maybe not fun, but it's okay.
Correct.
So I got some numbers here. Want to hear some numbers? So let's talk about State Farm. State Farm is the biggest of the insurance companies at the moment. I think they take about 10% of American market share.
Yeah.
So huge. They described 2023 as a year of, and I'm quoting from their report, catastrophic losses.
For sure.
Yeah. Specifically, their underwriting loss was the greatest in 100-year history. Their 100 years of operating in 2023 was the worst.
Yeah.
Specifically, they lost $14 billion, which is a lot. But here's the thing. From 22 to 23, they had grown the revenue from 45.7 to $56 billion. Yeah. That's a growth of like 22% in a year. And that growth was still not enough to offset the losses.
Correct.
That is insane.
Yeah.
And 24, I don't think was much better. A little bit better, but
I'm hearing it's slightly better for them, which is nice. They are the big one, and there's other big ones as well, that they take a loss when there's any massive loss. I mean, I'll give you an example on a very, very small front is when there's a fender bender on the freeway locally, I'm hoping one of my clients isn't involved in it for multiple reasons, obviously, but I have to wonder, you ever see a 8-car pileup on a freeway, you know for sure there's a State Farm client in there. Like that's just how that's going to work. So even with the wildfire that's currently happening in California, you know State Farm's going to get hit worse than almost anybody on those. So yeah, they're taking massive losses and being kind of the leader in certain aspects in the industry. They kind of get the spotlight shown on them a little bit more than we do on us.
Yeah. For 24, they also had another report that was saying that they're doing a little bit better. I think this was still a projection about halfway through 24. And they credit their offsetting of losses because they're still losing money, but they're offsetting it by raising things like car insurance by, I think the average was close to 19%, 18.8, which is like, that's a year. Over 1 year, 20%. How much do you think insurance has gone up for things like home and car over the last 5 years since COVID, really? Because it seems like everything's just gone so much more expensive that it's hard to keep up with.
The specific numbers, I'm sure, will come out in the next few months as we now hit the end of the year and they can kind of start to really tell us some of that. I will tell you this, that they typically don't increase it the amount they want in one fell swoop.
Right.
They go to the insurance commissioner and say, hey, we'd like to up it by this amount. Insurance commissioner says, no, but I'll let you do it by this amount based on what we're talking about.
Right.
They have to go back and they have to provide proof that that wasn't enough, that we're still taking a loss. And then they can go back and ask for more. And so in certain cases, we've had some companies that have stayed steady until a big 30 or 40% increase. And that was terrible.
Right.
And then we've had others that have done 20%, followed by 17%, followed by 21%. Also terrible. It's not fun either way.
No.
So yeah, the companies have their own way of doing things. But I'd say the average, I had a company come to me 2021 and the rep said, I would expect your home policies between 21 and the end of 24 are probably going to double.
Right.
She wasn't that far off. It was probably a good 70 to 80% on a lot of homes. So that's why we get phone calls every day from people saying, oh, my rates have gone up so much. What can you do for me? We usually start with saying, it's been going up everywhere. This isn't your agent making this happen.
Yeah.
The company you're with did not make this happen. This is just losses in general, and everybody's getting caught up. Everybody's raising, but let's do some quotes for you and let's find out if you're still in the best situation.
So like right now, California, I think it's been going on for about a day now. Massive fire. It's like destroying Pasadena.
Yeah.
Obviously that's huge, but we've had fires in the past. Why do you think things are going up so much? Are just natural disasters increasing? Are prices of homes just getting too expensive for insurance carriers? What's going on?
Well, in many ways, people are expanding communities into the foothills of places. And so you see these places that used to have wildfires and there wasn't a lot of homes up there. Well, now some of those homes are beautiful and new and $1 million+ homes, or in California, maybe double plus that.
Yeah.
But so those losses, they're not small losses, and they don't have fire trucks right around the corner. Like they catch on fire, they're going to burn down in many situations. So those are massive, massive losses when they have these fires. And like I said, with the example of the 8-car pileup, you have a big one go through an area. State Farm's going to get hit really hard. Some of these other ones. And it does. It all trickles down. There was a few years ago, Houston had some massive flooding.
Yeah.
Massive flooding. Flooding is a specific coverage on a specific policy. So not all homes have it. But if you have comprehensive coverage on your car, you're covered to replace your car. So there was totaled cars everywhere through there. That affected rates on both probably a local, regional, and national level. So it plays a role.
So it sounds like with insurance companies, big and small, they're kind of forced to be a little bit behind what the current prices of things usually are. The insurance commissioner has to go, okay, you can raise your prices by this much. Now that things are getting steady, are we really just seeing insurance prices level out after maybe some of the craziness in COVID and just how things spiked back then? It took 5 years for us to finally get the insurance companies adjusted to what they've probably been paying for those 5 years.
In part, yeah. I mean, it's what they call it, a loss ratio. And so if, for example, an insurance company is bringing in $100, they kind of have the math that says, well, in order to do operations, cover all of this, take care of have a profit, we need to be paying out loss ratios in, say, the 80% mark or whatever it is. That's kind of our expectation. When we started a business, we expected for every dollar we're charging, about 80 cents goes back out in claims in that. Well, it hasn't been that way for years. It's been over $1 being paid out. They've been losing those monies. And it doesn't mean that there's still not a ton of money flowing through these companies. There absolutely is.
Sure.
But it does mean the actual losses have exceeded how much they were bringing in and projecting for said losses. And that has played a big role. And insurance, I tell people all the time, insurance is shared risk. It's a transfer of risk. We decide how much we want to give onto the insurance company to take rather than us taking. So if I have collision coverage on my car, that's my way of saying, I don't want to pay to repair my car if something happens. I want you to pay to repair my car if something happens.
Right.
And so I'm choosing to transfer that risk over to that company. I could also withhold that. I could say, I'll keep the risk on myself. Insurance is also a shared risk. So it's a bunch of people hanging out in the same swimming pool. Something bad goes on in that swimming pool, everybody gets affected by it. So You drop a big shark in the middle of that thing, everybody's going to be upset. They can't just go, wait. I didn't mean to swim with the shark. Like there could be problems. So we definitely tell people that it's the transfer of risk, and you decide how much you want to put on them, how much you want to keep yourself. And remember, it's shared. So tell your friends not to do fraudulent claims, and, report it if there's something bad, and don't make small claims, because that's just a way to kind of, stir the pot. So